Good day. Ira Epstein of Linn Associates with your metals market wrap-up for a pretty wild trading day on this Thursday, the 28th of January, 2021, about 4:40 p.m. Central Time. By the end of the day, just look at this range in the silver just so you can envision what this market's doing. Gold, a $30 range. Everything else is fairly quiet, but in copper, 10 cents isn't considered quiet. And that's pretty wild in itself. Dollar down a bit, euro up a bit, and the stock market, well, it gave up a lot of the early gains that it made. So what we're really fighting with in these markets continues to be the GameStops, the AMC, and the others, lawsuits going crazy against brokerage firms that have shut down trading in those particular stocks, and then margin calls. You saw Robinhood, it's drawing down on hundreds of millions of dollars of its capital. Citadel had to put in $3.5 billion into Melvin Securities. I mean, you just see the carnage on the street. And keep in the back of your mind, when there are more shorts than longs on an option, and if a trader stands for that option for delivery, the shorts have to deliver it. Well, there's not enough stock, even in a perfect world, to deliver on all that, so it's a natural squeeze. That's what somebody on Reddit and other things have picked up on. I don't know the solution to it. It's not my job to. I'm just a trader, but I watch what's going on. Gold continues to not perform. It is still down $18 for the week going into Friday trade. It's staying under the 18-week moving average of closes. This chart doesn't look very appealing. When you put on the swing line, you still have the pattern of lower highs, lower lows. So even if the market were to get back over the last swing line low of 1867.40, all it could do is stop the downtrend as a chartist. It can't start an uptrend. Where did the market rally back to and fail? Remember that 200-day average I've been pointing out to you over and over? And I said that was your value area. Well, the market tried to hold it today, get up to it, in fact, and it just missed it by 40 cents or so, and boom, it just let apart again. So what was something of a support area suddenly turned into a resistance area. So where's the support? Probably the lower Bollinger Band all the way back at 1794. And I am not saying it has to drop that far to find the support, but I am saying the trend is down, the bias is down, and the market is not oversold. You still have a 32 reading? The bears are still in control of this market. Don't think it's just going to change. As I said, you can change whether you have the downtrend, but you can't start an uptrend, still the bear's in control. Gold-silver ratio collapsed in the favor of silver. And as you can see, the silver market took off to the upside, ended its downtrend. This is that pattern. I'm going to take it off so you can see it. With this lower break, even if you took out 25.83.5, you've got to close over the 25.90 level to keep the bias up, but if you take out that 83.5, you end up at best with a lower low and a higher high. So the market shot up in the morning. This thing was way up. When I woke up, I'm hitting the screen. Is it really up $1.50 or so? I'm going, wow, that's a crazy move. And I'm looking for news everywhere. I found nothing that made any sense. Looks to me like just short unwinding, and the market pulled back to finish out the day very close to the 18-day average, but over it. So the bias is up. You don't have a trend on the swing line. Momentum trying to turn itself up a little bit here. Now we'll see how it handles 25.87.5. In the copper market, the first challenge of a lower band. In unison, what do you do the first time you hit a lower Bollinger Band? Come on. I teach that the smart money, quote unquote smart, covers their position, jams a stop way down. Sometimes they take the whole thing off. You were not oversold. You hit that target. There's still going to be resistance as I'm looking at the chart at 362.25. It would take a move over 364.15 to stop the downtrend. Now this market has come down in the face of the Lunar New Year, probably lack of a lot of Chinese buying. If they have enough, they won't buy a lot. They'll go through their supplies as they ramp up into the new year, and then as they come out of it, they'll come back to the market. That's often the program. In the platinum, out of a trend. You now have a higher high, lower low, just a lot of nonsense going on. Remember the first time you hit that Bollinger Band? Tell me that wasn't the spot. Palladium, first time you hit the band. What do, my friends? Out you go. That doesn't mean you have to be a hero. If you embed, we'll do something else. If you can see, both numbers today finished under the 20 level. Yesterday, both were under 20 and the day before. So we have a full-fledged embedded reading, which tells me that on rallies, the pros are probably going to sell the market in between the 23.59 to 23.84 zone. Probably putting out some shorts there, some a little higher than that until they lose the embedded reading. Lose it, I think the shorts will evacuate those positions. And in the dollar index, couldn't quite get up to the last highs. Momentum is turning down. Market lower, swing line up. Bias up. Swing line up, momentum turning down. Again, if the pros are going to defend their long positions, I would venture to say it'll be the 18-day average. And if you were to get now under 90.03, I think a full-fledged sell picture starts developing in this market. So I'll be looking at that as well. You know, in the mornings, what I do for you is I put out my morning subscriber video. If you don't know about it, it's really simple. Go to our website, www.iraepstein.com, under the word research, read about my subscriber videos. Away you go from there. I'm Ira. You have a great day.